This is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome to a special merge edition of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. It is Thursday, September 15th at 9:30 a.m. We woke up to a different world overnight while I was sound asleep, and Andrew, apparently you were as well. The Ethereum network migrated from proof of work to proof of stake. This is something we've talked about a number of times on the show. We've talked a little bit about how it was all going to go down, whether it was going to happen, within a given timeline, what the odds were, and also a little bit about the significance. But I think what we'd like to do today is kind of walk you through what exactly happened, what it means for Ethereum in the sort of short to medium term, what it means potentially for DeFi and the broader ecosystem around Ethereum, and then long-term, how it impacts the nature of Web3 and blockchain. So there's lots to discuss, so let's jump right into it. Andrew, you weren't awake for this, but tell us about the merge. You're muted.
Sorry. Yeah. The merge has been sort of compared to swapping an engine in a car that is currently on the highway. But looking at the process, it looked very seamless. For the most part, around 6:45 a.m., it officially kicked in. 6:45 a.m. UTC. So I think that's around 3:45. The Ethereum mainnet switched from POW, so proof of work, to POS.
Proof of stake.
Proof of stake. And for the most part, nothing really broke. There's a lot of people sort of thinking that DeFi protocols would get sort of wrecked or destroyed in this process. That didn't happen. Obviously, gas costs went crazy for a bit around there, just with transactions and stuff like that. But for the most part, the merge, after I guess multiple years of testing and working on it, went pretty seamlessly. And what's really cool about this is that from an optics perspective, and we can look into the tokenomics as well. I've been getting a lot of people messaging me this morning that aren't in crypto, talking about how cool it is that Ethereum went quote unquote green. That seems to be the mainstream's take on this switch, which is obviously more of it's more than just going green, obviously. But and so I have to say, I've seen a ton of positive sentiment around the switch, though the price doesn't seem to have moved too much. Just curious, have you been seeing that as well, or what's your sort of take in the TradFi world?
Yeah, absolutely. Well, one of Canada's major news networks reached out to me this morning to go on and talk about it this afternoon. So it's definitely kind of broken into the mainstream. This is not like our news network. It's not CNBC or BNN. This is, someone else. So then that's revealing. That's for sure. You mentioned the idea of a car driving down the highway and swapping out the engines. The analogy that I've been using in my writing on this is it's like swapping out the engines of a 747 for all electric motors, some sort of new kind of engine in the middle of a transatlantic flight, without changing the flight plan, without upsetting the in-flight entertainment system, without really anybody in the airplane even noticing. And obviously people are aware of the merge, but the idea that there are hundreds of billions of assets that are tied up through ERC20 and ERC721, the token standards for Ethereum, in hundreds or thousands of applications in DeFi and in other areas of Web3. And that there are thousands, or millions of users who kind of relying on the system as a way to store value, to do transactions, to play games, to do all sorts of stuff. And the fact that it kind of went off the way it did, I think is incredible. I think it's too early. Well, it'll take years before we have, an accurate sort of history of what really went down or understand the significance of it. This is probably one of the biggest undertaking in open source software ever. It's a sign that a decentralized network, with a group of core developers can actually do something significant and complex to an entity that is worth such a huge amount of money and means so much to so many people. So I'm pretty excited about it. Obviously, I think it's a huge thing to de-risk the industry for a couple of reasons. One is the narrative side. By some estimates, it's going to reduce the carbon footprint by 99%. It's also going to clear the deck for the Ethereum developers and bigger community to focus on other network upgrades, which will include improvements to scaling, security, usability, and so forth. It will definitely remove an overhang for investors. I think a lot of people have been unsure what the timing was going to be on this and what impact it was going to have. I know that SX had a market for a prediction market for when this was going to happen. And clearly, as the odds improved that the merge was going to happen, we saw Ethereum outperforming Bitcoin to the tune of, I think, 17% over the last 6 weeks. So obviously, investors are happy with it. The fact that it's not moved much now is, to me, just a sign that it's already been basically priced in, at least in the short term, in the short term. In the long term, I think there's a lot more value that people haven't quite fully appreciated. It definitely also solidifies proof of stake as one of the two main consensus mechanisms. Now, most new blockchains that have launched, especially since 2018, have launched with proof of stake. This is not a new thing. Solana, Avalanche, Cosmos, a number of different blockchains use this. But now half of all, or more than half of all blockchains are now secured with proof of stake. And I think that's really significant as well. And then the final thing that to me is really interesting is people in the crypto community don't think about this, but there are a lot of enterprises that are really interested in Web3 use cases. We saw Starbucks recently announcing, a major push into Web3 with basically a form of, its loyalty points and credentials for accessing, services and other products and what have you. And, even though that's not a big structural change to their business, there's clear evidence that a lot of organizations want to get into this. But if you're an enterprise and you're thinking, okay, I want to build a new business unit, or I want to, make this a part of my strategy, you need to know what the rules of the road are for the technology that you're building on. And I think that for a lot of people, the fact that this migration was still out in the future made it difficult for a lot of organizations and enterprises to say, okay, I am ready to build on Ethereum, or I'm ready to pursue like a Web3 strategy. And that's why I think for, the first era of enterprise interest in blockchain, it was all about blockchains that they could own and control, because a lot of a lot of what was in these public protocols was still unclear. And to be sure, there's going to be lots of changes to the code base. There will be ways in which the network needs to scale and improve through layer 2s and side chains like Polygon and others. But in general, this is a huge overhang. It's a huge risk to be removed if you're a big company looking to do stuff in blockchain and in Web3. And it doesn't necessarily mean, in my view, that, okay, now it's like Ethereum's, that's it. And, it's all going to be built on Ethereum. There are definitely some, open questions about how it will work as a proof of stake system, whether or not it will become captive to large stakers, whether or not it makes it more easy to censor, to, reverse the chain and all these other concerns. But to me, these are all implementation challenges that I think are going to be overcome, because obviously this is something that just makes blockchains that much more usable and that much more impactful. I also think, by the way, that it'll probably have a positive impact on Bitcoin and the price of other crypto assets. Again, just because...
Yeah, sorry, I want to interrupt there. I'm not sure actually it's going to help Bitcoin too much.
Okay.
I agree. And actually, so just to sort of counter one of your points, the reason why is I think from what I'm seeing is this opens up a clear attack vector on Bitcoin. So historically, Ethereum has been seen as having sort of more regulatory risk than Bitcoin.
Right.
Because, you know what I mean? It was totally different founding story. Bitcoin was obviously a non-founder, or maybe a group of non-founders, who has now since disappeared, who didn't give himself any pre-mine, i.e. any personal allocation. Whereas Ethereum obviously was different, which in my view is totally fine, but some people view that as like making it more of a security. But over the last few months, it looks like the SEC has kind of officially declared Ether as a commodity. They said the CFTC should be the ones to regulate Bitcoin and Ethereum, so putting them in the same bucket there in terms of securities law. But now, just going back to this green point, Bitcoin is, at least from the sort of environmentalist and ESG movement, is going to be seen as kind of the bad guy relative to Ethereum. A lot of the questions I'm getting right now from people who aren't in crypto are, why isn't Bitcoin just do this? Which obviously, as we know, have been in the industry, Bitcoin, in my view, it's incredibly unlikely Bitcoin will ever change to proof of stake, and I don't even think it should. And then relative to other alt ones, I know what you're saying in terms of like the merge is going to sort of lift all boats, like the rising tide kind of lift all boats, which I do agree with. Yeah. But I do think, like, here's one example in the NFT space. So Ethereum has been sort of hemorrhaging market share in the NFT space over the last 6 months. Yeah. It's essentially gone from 100% of all trading volume on Ethereum to sort of, I think it's around 85% now, 80%. And one of the big narratives that's been helping these alternative chains like Solana and Avalanche get market share is that Ethereum's not green, which for people in the NFT and sort of content space is actually a really important sort of thing. And so that goes away now with the merge. And so I'm sure there's a lot of things sort of like within the DeFi space, you now have a risk-free, essentially like the equivalent of like a risk-free yield with the staking rate now that Ethereum's POS. So a lot of people are saying that over the next couple of months.
Just to be clear, like risk-free in the sense that it's like a benchmark rate. Other investment opportunities, because like obviously like there's principal at risk with Ethereum. It's not like a bond, like a treasury bond or something like that.
Yeah, for sure. I mean, there's theoretically, in reality, there's no risk-free rate even in the TradFi world, right? Like,
yeah, obviously, like, you know, like inflated away, or the government can go bankrupt and whatever.
Yeah, exactly. But moral of the story though is, you're correct. There's now like a benchmark rate, and a lot of people think like traditional investors love yield, and now that you can get sort of a 4 to 5% yield on what is a relatively well-established blue chip crypto asset like ETH, that should pull in a lot more sort of traditional money into the space through Ethereum. Mm-hmm. And that risk can also be traded. So that yield, like a lot of people are talking about like a thriving yield market that's going to be created now that you can use this thing called liquid staking, where you can essentially package the staking yield and trade that itself, almost like a credit market.
Yeah, exactly.
Like interest rate swaps and stuff like that on the staking yield, which could lead to kind of like the resurgence of DeFi in a way. So yeah, I do agree with you. It's good overall within the space, but I do think from a relative market share perspective, this is bad for other crypto assets, even if it is sort of on an absolute basis good for them.
Yeah, I think, look, I think that it does probably sharpen the focus on Bitcoin's carbon footprint. And by the way, that's why like at 9 Point, we offset 100% of the carbon footprint of Bitcoin so that anybody who buys into our ETF is getting exposure to green Bitcoin, because we know this is a concern. So like, I'm not blind to the issue. But the counterpoint is like, it's just so early that having one of the two largest things undergo a massive upgrade and do so in a way that, coordinated thousands, millions of people in a way. I mean, most people were inert, passive sort of watchers of this, but there are a lot of people involved in this. It's just good for the whole space. And, it's like, what's good for the goose is good for the gander. Like, I just think it's a positive catalyst for the whole ecosystem. So does it just, okay, does this mean, oh, well, now the proposition for Solana is less interesting than it is for Ethereum because Ethereum is now green and, more Hollywood types and creators and things like that are looking to do content projects are going to use Ethereum? Maybe, but does it also just raise consciousness about blockchains and proof of stake and mean that just there's more activity in general happening? I think that's at least as likely to happen, if not more likely. And we've said before, Andrew, you said at least that you think block space is going to be the big scarce resource, and there's going to be a need for all sorts of different blockchains. In fact, you've even said like application specific blockchains. So I hear you on the Bitcoin part, but like kind of like Honey Badger doesn't really care. Like, I just think that it's going to just keep on. Like, Bitcoin doesn't have like a a CEO or board of directors, or like doesn't have like an ESG council or something. Like it's going to be, it's just going to do what it does. And if people want to price it lower because of that, then they will, but I doubt they will. And I also know that the energy story on Bitcoin is way more complex than it's made out in the mainstream media, largely because, Bitcoin mining requires low to no energy input costs, which means typically accessing or co-locating near renewable fuel. So there's a story there around Bitcoin that I think requires much more education as well. But we'll see. I think that obviously it's a big positive. Clearly, as we've said before, there are things that are endogenous to crypto, like unique to crypto, that I think can move the price. I think that the lead up to the merge certainly did that, and you're definitely correct that I think more traditional financial investors will see Ethereum with a stable yield as a more attractive proposition. And also, we haven't talked a lot about like what it means for kind of supply demand dynamics of ETH. So like most people, just by way of background, miners have capital costs of buying equipment. They have operating costs of buying energy, and they basically like convert energy costs into crypto, into ether, right? So that's how like Ethereum worked. If you're a staker, you don't have any of the capital costs, you don't have any of the operating costs, and you don't have to be big. If you want to be a validator, sure, you've got to have a sort of minimum number of ETH, but anybody can stake their ETH to a validator. So in other words, like all of a sudden, all these people before, miners who were earning tons of money, the average mining reward like a month ago was $600 million paid to Ethereum miners. 80% of that, probably, according to some estimates, was being sold in order to run the business of being a miner. But if you have none of those costs, then there's no reason to do that. Now, some people might say, well, I'm going to, like anyone else, like let's say you have a bond and you have some income, you might use that to sell, you might sell it and use that money for some other purpose. Sure. But a lot of people are going to basically put ETH on a drip. Basically, like they're going to have ETH, they're going to stake it, they're going to earn ETH, they're going to just restake it. It's going to be like a dividend reinvestment plan, like an ETH reinvestment plan, right? An ERIP. That is going to, I think, significantly reduce the amount of like net supply that's in the market to buy. And there's been lots of analysis on this that people can check out. But, if the demand for an asset remains constant or increases and the supply gets cut by 80% or more, then obviously it's going to have a positive impact on the price. And that's not even including like the burn function from the upgrade of whatever that was, EIP 721 or whatever from last year. Right. Sorry. That is actually like we're taking ETH out of the system as well. So we've talked about the Arthur Hayes thesis on this, that, not only is ETH going to become, less inflationary than Bitcoin, it's going to become deflationary if you combine the lack of net ETH hitting the market from stakers reinvesting, but also from the burn function, that all of a sudden, even if the gas fees remain the same, and like, even if like the output of new ETH is the same, the way it's sort of constituted and allocated will change the nature of the supply and demand dynamics.
Yeah, no, I totally agree. I think that the tokenomics shift is the biggest factor here, besides sort of the narrative shift. And exactly like you said, assuming the transaction fee on Ethereum is above 15 GWay, which over the last 6 quarters on average it has been, then more fees are burned, more ETH is burned than is issued to stakers. So ETH is deflationary. And this could lop off somewhere around 1 to 2 million Ether per year, which is effectively a 150 basis point, 1.5% of the total supply per year. So the way I describe that to traditional investors is this is essentially a 1 to 1.5% buyback yield, right? Yeah. Because burning is the equivalent of buying back shares in the open market and retiring them. And on top of that, you can stake and earn a 5% yield as well, which is kind of similar to like a stock yield. So like overall, you're getting almost like a 6% yield on an asset that is like a network that's growing at a huge rate, like historically has grown over triple digits per year. Like there's no stock like this that exists in the traditional market. And the reason why it trades like this is because it's still kind of scary. There's no mandates for most people to get involved. It's like, how do you, most people don't know how to buy Ether or store it. They hear about hacks and stuff like that. So to me, Ether is incredibly sort of undervalued relative to where I think it will be.
I mean, all these things are undervalued. Like Cosmos was the pioneer of proof of stake. You know, I remember when proof of stake was like proposed, I'm like, well, that's really weird. But like actually the math, like the concept makes a lot of sense. There's a great columnist for Bloomberg, Matt Levine, who wrote this piece where it's like, normally it's like, what's funny about crypto is that they keep reinventing things that have been around in finance for a long time. And he says it's really funny that crypto's come around to reinventing interest, because that's like the oldest concept in financial services. But it's actually a huge innovation because, and he says so, interest was typically paid for loaning money to someone who would promise to repay it at a future date. Now interest is being earned for basically like pledging money to run a blockchain. So in a way, you're doing something useful with your capital, and you are being compensated with, a reasonable rate of return for doing that. Like there's lots of value and utility to having a ledger, an Ethereum ledger, Ethereum blockchain that acts as the foundation for a whole, economy of applications. So that's, it's a kind of a really simple, essential way of understanding that concept. But, I just think like, all of these proof of stake networks that have been running, they've been provably running well the way they have been for years and are supporting applications and assets. It's like, start paying attention, people. Like I think mainstream investors are definitely, this could be a catalyst to get them to sharpen their focus on Web3. And obviously that's going to be good for all these different protocols.
Yeah, exactly. I mean, you see it more than I do because you're literally on the front line of bridging traditional investors into crypto. So
right, yeah.
I'm actually curious, have you seen, because you guys obviously run the Bitcoin fund, have you been getting sort of inquiries from Bitcoin fund investors asking about the merge? Like I'm curious to hear their sentiment on, because from my understanding, most of your investors, their only crypto allocation is the Bitcoin fund. So
Yeah, I mean, I think that they are interested in it just insofar as it impacts the whole asset class, and also, whether or not they should be investing in ETH. Now, we don't have an Ethereum fund at this time, but there are other, ETFs that offer exposure to Ethereum. So I give my perspective on the network and its significance. And obviously, if anybody listens to this podcast or has read any of our weekly notes, they'll know that we've been constructive on Ethereum for the whole time, right? And I mean, I was actually in the offices of Consensus in 2015, in July of 2015, when the Genesis block of Ethereum was mined, when the first ever transaction happened on the Ethereum network. And at the time, the Ethereum network was worth $200 million, maybe. And Consensus Systems, which today has been funded by JP Morgan and has like 1,000 employees, it was two other people plus me and my dad in a room that's smaller than my office here in Toronto. So, I kind of come at this honestly. I've been a big fan for a very long time. And, we've got a podcast call DeFi Decoded. You're building on Polygon, which is a, sidechain for Ethereum or layer 2 for Ethereum. And like, we're
I don't know. We're Toronto boys too. So
yeah, exactly.
I remember going to the very first blockchain revolution, sort of the unveiling of the blockchain revolution book. And I think you had Joe Lubin on the stage with you and Don.
Yeah.
And they were just talking about the first ICO on Ethereum.
Yeah.
And which was
Augur. We're talking about Augur.
Augur. Yeah. Which is, I mean, Ethereum's done a lot better than Augur, but I guess in a way, SX, what we're building is actually competing with Augur. So maybe you get some credit with originally inspiring me before I knew it. But
there you go.
But anyways, it was kind of, I mean, it's interesting to see. I mean, one thing you brought up earlier that I do want to point out is the prediction markets turned out to be right on the merge. So
Yeah.
we had a prediction market on SX. I was actually shorting it, which in hindsight is pretty stupid, because I just was sort of betting on the merge not happening within the time frame, given the historical record. I didn't have any clearly it didn't have any insider info.
No.
But the prediction market actually went up to around 95% leading up in the last 2 weeks before the merge. And for the most part, trading like stopped because it was almost just a certainty at this point. So
yeah.
It's interesting to see the prediction markets did a great job. And interestingly enough, about 2 months ago, they had it as like a 65%, which I thought was way too high, but clearly it was the right move. So hopefully we'll have more sort of prediction markets on future upgrades and stuff like that. But I guess one last thing we should probably highlight is the like, where do the miners go now? You know what I mean? Like they have all these GPUs, and what's interesting is the ETH like POW token has had a lot of issues actually getting up and running.
Yeah.
It currently trades. I've seen something that trades on FTX around $20. I should actually I'll check it again because that was a couple hours ago. Which seems
that's a lot lower than people thought, right? I mean, or maybe
seems
not.
Too high to me, though.
Well, I mean, like our past experience with forks is that, you know, in the case of Bitcoin and Bitcoin Cash, that the forked coin was worth around 10%, and even Ethereum Classic today, I think, is if it's a 4 billion, it's call it, you know, 3% or something like that. So I think people were, and interestingly, in a lot of DeFi protocols, people were like borrowing ETH at 50% borrowing rates because they only had to hold it for a few days and clip this, you know, risk-free return of this forked coin, right? Sort of like if someone was spitting out, like a traditional finance, a company spitting out some, you know, small non-core business unit, and then all of a sudden that thing trades and it's worth something. But we're at least $20 is like I think it's like 1.7 or 1.8%, depending on where the price is. That's pretty meaningless, you know, like in crypto, like 100 vol asset where, you know, 1.7% moves happen sometimes like tick by tick. Like this is not a big price. Like it's pricing it as if it's kind of irrelevant. And I read something on Twitter. I haven't done the background, but like miners are earning, you know, $300,000, like at the current rate, the current price, they'd be earning about $300,000 a day on ETH POW, which, you know, what's that, like 10 million a year. So they went from a month. So they went from 600 million to 10 million. It's just not enough. It's just not enough. It's not profitable. It's not enough to pay for the electricity and upgrading hardware and the rest of it. So I don't know. We'll see. It's really early. We're on day 0 here of a post-merge world, but not looking great, I think, for this so far.
Yeah, I mean, I think one thing to keep in mind, it's only a couple percent, as you said, so it's insignificant, but it's still a $2 billion asset that trades $40 million in the last couple hours, which is totally insane to me. That kind of an asset that everyone knows doesn't really have any value can still have a $2 billion. To go back to your analogy, it's like a company spinning out a subsidiary that just has a slightly different name and different branding, and that's it. No assets or anything in it. And that's worth $2 billion. So I don't know. It's down 40% from when it started trading. So who knows where it ends up. One other thing that's kind of interesting, a lot of miners are shifting to Ethereum Classic. So Ethereum Classic is a forked version of Ethereum, or I guess in a way you can think of Ethereum as a forked version of Ethereum Classic from the DAO hack. From I guess 2016, and the hash rate on Ethereum Classic has just exploded. I think it's up like 300% overnight. So clearly, miners are looking for anywhere to mine because Ethereum Classic, for the most part, is relatively dead as well. But I guess it doesn't really matter in the end. It sort of just trades as like an insurance policy, I guess, in a way on Ethereum.
Meme coin, lots of stupid things have value in crypto. I mean, I don't know. Like if there's a community and there's miners, it'll have value. But I think the big story here is like, it's smaller relevant than people thought, I think, so far. And that, I think, reflects the how united the community in Ethereum and around DeFi was to the move to proof of stake and to the, the long-term game plan and viability of the platform. So like, I don't, let's not bury the lead. Like, to me, that's still the big story here. Andrew, anything else you want to add here before we wrap it up? We got to turn this thing and get it out to people to see.
Yeah, exactly. No, I think I was pretty worried, to be honest, going into last night. But I'm really happy to see everything went smoothly. So it goes to show you that the years and years of sort of delaying the merge and doing more testing was perfect. Like, it was the right strategy. And I think like the next couple of months are going to be sort of, who knows what's going to happen. Obviously the macro environment is sort of deteriorating, but I've never been more sort of optimistic and bullish on Ethereum. And I think just overall, I'm really surprised by how positive sentiment in the mainstream sort of news outlets and also just from sort of my friends who aren't in crypto has been towards Ethereum for making this shift. It really sort of paints Ethereum as the good guy within the mainstream consciousness. And I'm a little bit worried because it does seem to paint Bitcoin as the bad guy in a way, which I don't think is actually earned at all. But
no, that's a different argument for a different podcast. We can always, go in and defend Bitcoin because I think it deserves defending big time. But at least for now, like, let's take the win for the whole industry.
Yeah. What about you? Do you have any last thoughts on the merge?
No, only that I think it's going to take a little bit of time for people to come around to its significance. And I think that if anything, the early signs are really positive that this is going to be a catalyst to drive more mainstream awareness, maybe more incremental investment dollars. But I think the big thing, and the thing that people still don't really talk about, is enterprise utility of public blockchain infrastructure. I think this is going to clear the deck and make it so much easier for not only Starbucks and others with their little NFT projects, but like big major business transformations to happen in blockchains. And like, that's something that people are not talking enough about. And I think this is a big step in that direction. So I'll be keeping an eye on that for the next little while too.
Yeah, sorry. Yeah, I totally agree.
Yeah, right on. Okay, well, that's it. This puppy should be up soon. Thanks everyone for joining us. And yeah, see you next time. Take care. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.